Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look at Chapter 6. Chapter 6 will focus on financial indicators, analysis and interpretation. This is the last step in your accounting cycle. We need to analyze and interpret our statement of financial position and statement of comprehensive income. Now, you will be provided with a formula sheet, but I promise you, a formula sheet is not enough. You need to make sure that you study your financial indicators. You need to answer the following questions. Is the business profitable? How well are we managing our expenses? Is the business solvent? Is the business liquid? What is my return on my investment? Are we reliant on own capital or borrowed capital? These are just some of the questions that we need answers to. You need to know which financial indicators will be able to answer those questions. And that's not given on a formula sheet. So make sure that you study your financial indicators and know how to use the financial indicators. So when you start now with these activities, before you start with it, go through the theory booklet. In this chapter, we're not only going to focus on the financial indicators and the commenting part, which many learners battle with. We are going to look at how financial indicators can be used in your statement of financial position and your statement of comprehensive income. In other words, they provide you with the financial indicator and you need to find the missing figures. So the first activity will focus on the profitability financial indicators. The following information appeared in the books of Fitbit partners. They offer CrossFit services and sell gym equipment. So this is a service business and a trading concern. The business is owned by Pat Simmons and Roxy Smith, so it's a partnership. And the business uses a markup of 50% on cost. Required, complete the statement of comprehensive income for the year ended 31 March 2022. So if our accounting period ends 31 March 2022, it means it starts on the 1st of April 2021. Always know, when does your accounting period end? When does it start? Calculate the following financial indicators for March 2022. 1.3. Partner Roxy is concerned that too much trade discount is given to customers. 1.4. Apart from the percentage gross profit on cost of sales, indicate if the business is managing its expenses more efficiently and if more profitable compared to 2021. Then 1.5, consider the donation made by the partners to the local school. Why would the partners make a donation? So these are the questions that we need to answer. Then they provided us with the information, extract from the pre-adjustment trial balance and adjustments that you need to complete, and financial indicators. These financial indicators given to you are your financial indicators related to the profitability. How well are we managing our expenses? Is the business profitable? So we're always looking at the percentage gross profit on sales, percentage gross profit on cost of sales, and this financial indicators will always tell us, have we achieved our aimed markup or not? Then we look at our percentage operating expenses on sale, percentage operating profit on sales, and percentage net profit on sales. Before we start with the questions, we are first going to look at the adjustments. This is the part where learners battle with. So we're going to take some time just to go back and practice the adjustments using T accounts. Trade discount on cash sales given to customers was $78,500. They provided you with sales. Cost of sales is a question mark, which means we need to calculate it. Debtors allowances, 22,550. The business uses a markup of 50% on cost. Step number 1, we start with the totals brought forward. Sales has a total brought forward on the credit side. You should know that debtors allowances is always closed off to the sales account. Then sales is closed off to the trading account. So my total net sales for this year was 856,000. To calculate the cost, I cannot just take the 856,000 and use the markup percentage. Why? Because of the trade discount. Trade discount means that customers paid less on purchases. That's one of the reasons why we do not achieve our aimed markup, because we actually sold it for less than what we intended to. We never show the trade discount amount. We always show after the trade discount was given, how much did the customer actually pay. This means if I want to calculate the cost, I need to first add the trade discount to the sales figure, and then I can times it by 100 divided by 140 to find out my cost. So your step number 1 in this, debtors allowances is closed off to sales. Add the trade discount to cost of sales, and then calculate the cost of sales using the markup percentage. Now, practice this if the cost of sales is given to you and they said to you trade discount was 78,500 and sales becomes the question mark, know how to get the sales figure. So when we want the sales, we then need to first use the markup percentage to work out the sales figure, and then we're going to subtract the trade discount because we sold it for less than what we wanted to. Adjustment number 2. An invoice received from JK Traders has not yet been recorded in the books. The following appeared on the invoices. Carriage on purchase, the total 696. Carriage on purchase means we need to add it to the trading stock account. Any additional cost in getting stock must be added to the trading stock account if we're using a perpetual or continuous inventory system. Creditors control and trading stock is not relevant to the statement of comprehensive income. So why am I doing this? If we need to calculate deficit or surplus when we do a physical stock count, we need to know what is our new updated balance of our trading stock account. This is why we need to show this. Your trading stock would be debited and creditors control would be credited. A debtor was declared insolvent on 21 March. His estate declared a dividend of 60 cents in the rand. 1,080 is expected to be received in April 2022. The balance of the account must be written off as bad debts. No entries have been made. We start with the opening balance. In debtors control, again, we're busy with statement of comprehensive income. Why do we open debtors control in this case? We need to know what is the debtors control balance if they've asked you in adjustment to calculate provision for bad debts on your new book debt. That is the balance of the debtors control. So when you're only doing statement of comprehensive income, open the debtors control T account, open the trading stock T account. We start with the balance brought down. His estate declared a dividend of 60 cents. 1,080 is expected. This means that 40 cents will be written off. Be careful now. That 1,080 is the 60 cents which we are going to receive. That's why we have to say times 40 divided by 60. 720 will be written off as bad debts. Debtors control is credited, bad debts is debited. Be very careful. It's expected to be received in April 2022, which is outside of our accounting period. We cannot debit bank and credit debtors control if we haven't received the money yet. Therefore, that amount that is still going to be received by the debtor is going to stay part of that balance in the debtors control. So we're only showing the bad debts that will be written off. Included in the rates and taxes is an amount of 7,800 paid for the period 1 January until 31 May 2022. Rates and taxes is an expense. We have paid the rates and taxes from the 1st of January until the 31st of May 2022. That is 5 months. Please be careful with this. Don't just assume that rates and taxes 7,800, which is included into that total, was paid over 12 months. We've paid it from the 1st of January until May, which means 2 out of the 5 months must be taken out. Rates and taxes will be credited and prepaid expense will be debited. Next adjustment, issued a credit note to Minnie Florence, a debtor for 650. Minnie was overcharged on fitness sessions conducted during March 2022. Again, debtors control is involved, but now this was a service which was rendered, which means we need to adjust the fee income. This debtor was overcharged, which means we need to credit her account. Debtors control is credited and fee income will be debited. Provision for bad debts must be calculated at 5% of book debt. Provision for bad debts adjustment is 2,100. A common mistake learners tend to take now, the 35,850 and times it by 5%. No. You have to take your new balance, 34,500 times 5%. Provision for bad debts has a balance brought down on the credit side, 2,100. This should now be decreased to 1,725. As soon as we have to decrease the provision for bad debts, the provision for bad debts adjustment is an income which will form part of your operating income. As soon as we need to increase the provision for bad debts, that is an expense to the business, the provision for bad debts adjustment. Interest on bank account is calculated on the balances on the last day of each month. Interest is calculated at 3% on favorable balance and 17% on unfavorable balance. So we need to calculate now the interest on our bank account. Because it says bank overdraft, this means that interest will now be calculated 17% on that unfavorable bank balance, which means we need to take 18,000 times 17% times 1 divided by 12. Interest on bank overdraft is an expense to the business, which means it will be debited. The asset disposal reflects the book value of equipment which has been donated to the local school. The selling price of 10,000 has not yet been entered. So if we take a step back and we look at asset disposal, step number 1, take out the cost. Step number 2, update your depreciation. Step number 3, take out the total accumulated depreciation. Cost minus total accumulated depreciation equals the book value. So they've done step number 1 up to step number 3. Step number 4, record the selling price. The selling price will always be credited to the asset disposal account. And what is happening here? How did we sell this asset? By donating it. This means we need to open up donations, which is an expense to the business. Step number 5, calculate if we made a profit or a loss on the sale of the asset. If we sold it for more than the book value, it means that we've made a profit. If we sell it for less, it means that we've made a loss. In this case, the selling price is 10,000. The book value is less, which means that we made a profit of 450. Profit on sale of asset is an income which will form part of your operating income. Partner Pat returned gym equipment with a selling price of 3,290. No entries were made. Do not think it's not relevant to the question, because they've asked us only to complete the statement of comprehensive income. And which two accounts is involved here? Drawings and trading stock. When we need to calculate surplus or deficit, it's calculated, the physical stock account balance is compared to your new updated balance in your trading stock. So we need to show any movement with regards to the trading stock. If the partner returned trading stock, it's always at cost. And now they've provided us with the selling price, which means we first need to calculate the cost. The markup percentage was 40%. This means 100 divided by 140 equals the cost. Drawings would be credited, account debited, trading stock, because the partner returned the trading stock. It means we got it back. The next adjustment, a physical stock count on 31 March 2022 revealed trading stock of 79,576 on hand. This is what is left over. This must be compared to my new updated trading stock balance. A common mistake, we take the 79,576 and we compare it to the 80,000 to see if there's a surplus or deficit. Your new balance is 80,000 plus the creditors control plus the drawings equals 83,046. If I compare that to the physical stock take balance, it means that there's a deficit of 3,470. Trading stock deficit is an expense, which means it will form part of your operating expenses. Now we've done all the adjustments. We're actually now going to start with question 1.1. So I'm going to show you now how do you approach this. Step number 1, we start with all the totals from the nominal account section. You should know that all income and expenses appears in the nominal account section. So when we do the statement of comprehensive income, which consists out of all your income and your expenses, we have to write all the amounts from the pre-adjustment trial balance in brackets, because we need to adjust those figures. Step number 2, now we need to look at the adjustments. The first adjustment was the trade discount on cash sales given to customers, 78,500. The business uses a markup of 40% on cost. To find out the cost of sales, we first need to work out what is our total sales plus the trade discount, and then we use the markup percentage to work out the cost of sales. Sales minus cost of sales equals the gross profit. A debtor was declared insolvent. On 21 March, his estate declared a dividend of 60 cents. 1,080 is expected to be received in April. The balance of the account must be written off. So the bad debtors control is credited bad debts is debited, which means we need to add 720 to the bad debts. A common mistake, we minus. Our expense will increase because of the bad debts which was written off. Your debtors control is going to be minus 720. Included in the rates and taxes is an amount of 7,800 paid for from 1 January until 31 May. 2 months needed to be taken out, so rates and taxes minus 3,120. This is my total expense for this accounting period. Issued a credit note to Minnie Florence, a debtor, for 650. Debtors control was credited, account debited, fee income, which means minus 650. Provision for bad debts must be calculated at 5% on book debts. It means that my new balance, 34,500, 5% of that means that my provision for bad debts must decrease. As soon as it's decreasing, that is an income. It forms part of your other operating income, 375. Interest on bank account is calculated on the balance on the last day of each month. Interest is calculated at 3% on favorable balance and 17% on unfavorable. We had a bank overdraft. 17% for 1 month means my interest on bank overdraft is 255. That forms part of your interest expense. The asset disposal reflects the book value of equipment which has been donated to the local school. The selling price of 10,000 has not yet been entered, which means we need to calculate if we made a profit or a loss on the sale of the asset. If we sold it for more than the book value, it means that we made a profit. Very important, do not forget to show donations as part of our operating expenses. 10,000, and then the profit on the sale of the asset will form part of your other operating income, 450. An invoice received from JK Transport has not yet been recorded in the books. The following appeared on the invoices. Carriage on purchase, it is not going to be treated as an expense to the business. It's added to the trading stock account. So don't show carriage on purchase in your operating expenses. This must be added to the trading stock account, 696. Partner Pat returned the gym equipment at a selling price, so we had to calculate the cost. Because the trading stock was returned, it's added to the trading stock account. The physical stock count on 31 March revealed trading stock 79,576. This means that we compared that to our new updated balance. That's why, and again I'm going to say this, we had to show these transactions, even if we are only doing the statement of comprehensive income. The deficit forms part of your statement of comprehensive income. Make sure that you show your calculations. Blunt repayment made during the year, these have not been recorded. The total interest on the loan for the financial year is 5,520. So the payment was recorded. The interest was not yet recorded. Interest on loan forms part of your interest expense. So this must be added to the interest expense account. Now we can calculate our total interest expense. Ensure that that is shown in brackets. So we've now done all the adjustments. And now look at all those empty spaces still. There's a reason why they provided the financial indicators to you. Now it's all about finding the missing pieces. So what can I solve? Interest income, insurance, there were no adjustment. Telephone, there were no adjustment. Salaries and wages had a question mark, which means that will be my balancing figure. Depreciation, there were no additional adjustments to that. Once I've closed all the brackets, I can now see what's the next piece of this puzzle. If I look at other operating income, I've got the total fee income, provision for bad debts adjustment, and the profit on sale of assets. This means that we can calculate the total operating income. Gross profit plus other operating income equals gross operating income. Now, if I look at the financial indicators, all of them has a question mark except for the net profit on sales. This means I can use the percentage net profit on sales to find the net profit. Why? I've got the sales and I've got the percentage. So to calculate the percentage net profit on sales, it is your net profit, which is unknown, that's what we need to solve, divided by your sales times 100 equals the percentage, which is 9%. So to solve x, we're going to say times 9 divided by 100. My net profit is 77,040. Once I've got the net profit, I've got interest expense, I can calculate the operating profit before interest expense. So this must now be opposite calculations. So instead of subtracting, I now need to add to find the operating profit. Now I can solve the next piece. I've got the interest income. I've got the operating profit before interest expense. So I can calculate the operating profit. We're working backwards. Opposite calculations, now it means we need to subtract. Once I've got the operating profit, you should know your gross operating income minus operating expenses equals operating profit. So working backwards, operating expenses will now need to be calculated by taking the gross operating income minus the operating profit equals operating expenses. Salaries and wages becomes now the balancing figure. This is your more challenging way of asking the statement of comprehensive income. You need to do adjustments, but you also need to use financial indicators to find missing figures, and you need to be able to work backwards. Question 1.2 is calculate the following indicators for March 2022. The percentage gross profit on sales. So now we need to use the statement of comprehensive income that we've just completed to calculate these financial indicators. The gross profit divided by your sales times 100 equals 22%. The percentage gross profit on cost of sales is your gross profit divided by the cost of sales times 100 equals 28.2%. Percentage operating expenses on sales is your operating expenses divided by your sales times 100 equals 39.4%. Then question number 4, percentage operating profit on sales. Your operating profit divided by sales times 100 equals 9.5%. Question 1.3, partner Roxy is concerned that too much trade discount is given to customers. Comment and quote one financial indicator to support his concern. Except for trade discount, what other reasons could there be for not achieving their aimed markup percentage? So looking at the first part of this question, and that's why you need to understand each one of these financial indicators. He's concerned about too much trade discount. You need to know that the financial indicator that we use to answer this question is your percentage gross profit and cost of sales. This is always compared to our aimed markup to see have we achieved our markup or not. Now, right in the beginning, it says that the markup percentage is 40% on cost. If we look at the percentage gross profit on cost of sales, we've only managed 28.2%, which means now I need to compare the percentage gross profit on cost of sales to our markup percentage, 40%, to see have we achieved it or not. That's the first thing that I'm commenting on. Then I can comment on from last year to this year. Has there been an improvement or not? Make sure that you indicate the trend and you quote your figures. So we start with the gross profit on cost of sales is 28.2%. The aimed markup is 40%. The gross profit on cost of sales decreased from 35% to 28.2% in 2022. The business did not achieve their aimed markup and it is less compared to 2021. So we first identify which financial indicator is applicable. Then we quote figures. We compare last year with this year and we compare it to our aimed markup. Then thirdly, we give an opinion. We're commenting on that. Except for trade discount, what other reasons could there be for not achieving? Poor seasonal sales, stock is incorrectly priced or the selling price is incorrectly priced. The markup percentage is incorrectly calculated. So these are some reasons except for the trade discount. So you need to know other reasons as well. 1.4. Apart from the percentage gross profit on cost of sales, indicate if the business is managing its expenses more efficiently and if more profitable compared to 2021. Quote indicators to support your answer. So now we need to look at all of the other financial indicators and we need to comment on that. Make sure that you use your answers which you've calculated in question 1.2.1, 3 and question number 4. You need to number 1, write the financial indicator. Number 2, quote the figures and indicate the trend. And then thirdly, provide a comment. Starting with the percentage gross profit on sales improved from 18% in 2021 to 22% in 2022. The percentage operating expenses on sales increased from 34.1% to 39.4%. So just a correction there, you cannot say it increased by the difference between those two. The actual increase to calculate that, you have to take the difference 39.4% minus 34.1% divided by the 34.1, so the previous year, and then you times it by 100. So this means the increase was 15.5%. Now, if we consider the current inflation rate, which is here about 7.4%, the business is not managing its operating expenses well. Please make sure, do not say it increased by the difference between those two, which will be 5.3%. It's 5.3% divided by 34.1 times 100. The actual increase is 15.5%. If we're looking at the operating profit, it improved from 8% in 2021 to 9.5% in 2022. If we look at the net profit on sales, it decreased from 10.4% in 2021 to 9% in 2022. This could be due to the cost of borrowing money which increased. It's just a possibility. but there could be other contributing factors as well. Just remember, compare last year with this year. Indicate the trend. 1.5. Considering the donation made by the partners to the local school. Why would the partners make a donation? The local community support the business, and in return, the business support the local community. This is part of corporate governance, giving back. This will bring the business in good standing with the local community. Thank you very much. Just to summarize, what we focused on here was completing the statement of comprehensive income, where you need to find missing figures by using financial indicators, and then you needed to solve the salaries and wages by working backwards. Then we only focused on the profitability financial indicators. Know the profitability financial indicators is your gross profit on sales. Another word for sales is turnover. Gross profit on cost of sales, operating profit, operating expenses on sales, operating profit on sales, net profit on sales. And this has to do with, is the business managing their expenses effectively? Are the business profitable? I want to leave you with this quote: failure is not failure is not the opposite of success. It is part of success. Have a wonderful day.